We started in March at much lower levels. Our view was that the huge amount of liquidity stimulus that was going into markets was likely to cause a rebound, a V-shaped rebound, both in markets and likely the economy. This is not, this is going to continue. Markets never go up in straight lines. We're looking at a bit of a wobble now. That's likely ahead of the election. Vol is likely to pick up and stay elevated for some time. But the key point here is that the amount of monetary stimulus that's been put in, the desire of central banks to create inflation, this is a new thing. Fed is targeting excess inflation. You don't want to be in the bond markets. You want to be in the equity markets. You want to be in the commodity markets. What we're likely to see in 2021 is an unprecedented boom in economies. And that's our view. It's contrarian, but so what? I think that's the way direction is going.
Michael, you and I and Jeff, not Karen, are a certain vintage, so we remember real inflation. But I mean, so quite apart from the question, will they ever succeed on creating inflation? My question is, I used to ask this all the time, but I don't bother anymore. Any downside effects of this amount of money being pumped into markets, of the trillions of dollars of extra capital being created? Any downside?
Well, the downside is very clearly in the fixed income markets. I mean, fixed income at 0.7% yields, as Jeff said, I mean, is ludicrously low in the Treasury market. Yield should be 100, 150 basis points higher. What are you seeing in terms of flows globally? You're seeing foreign investors take out $1 trillion of US Treasury holdings since the peak. Money is leaving the US. The markets are reacting with their feet.
Michael, there was an intriguing line about the European Central Bank is maybe looking at an Amazon-style market to sell hundreds of billions of euros of soured bank loans to prevent Wall Street's COVID debt swap. This kind of sets up the idea that there is a limited amount of capital available in private markets to soak up some of these bad loans. Does that make sense to you? And does it make sense for the ECB to try and create this entity?
I think it makes a lot of sense. I mean, at the end of the day, if you look back to compare this crisis with 2008-9, in 2008-9, banks were the problem. Now banks are becoming the solution. And policymakers have got to make sure banks are in strong enough to provide lending looking forward. What we're in is a world not necessarily of trade wars, as people keep saying. We're in a world of capital. We're in a capital war world. And it's basically about the tensions between capitals, international capitals, that really is the key thing to understand. And it's not just the US versus China. It's the US versus Europe versus China.